impromptu live stream with regard to where I'm getting this sneaky suspicion of being some sort of a peace deal coming down the pike out of Europe. And I'm going to go over the whys in a moment. As a technician, we look at price action quite a bit. And yeah, we look at headlines, of course, because it helps drive the narrative. Shares being pushed up because of headline news. There's only one problem with that type of trading. And I mentioned this last night. If you go on to last night's live stream on my YouTube channel, I mentioned that the news out of Europe was very dire. And it's headlines like this: Europe's nightmare scenario comes true. Energy bills to rise to $2 trillion, will reach 20% of disposable income. Moving on. We're not going to get into the articles here. It's just the headlines we want to talk about. Blackouts imminent. 75,000 powerless as record. California power usage sparks demand response event. Okay, pretty scary stuff. And this is today, right? Last night's headlines were just as bad, and there were a lot of them. We went over them. So you fast forward and you take a look at what natural gas prices did today, and they took a nosedive. So what should have been bullish news for natural gas prices was not. So you got to ask yourself, why? Why is natural gas pulling back with headline news so bullish for natural gas? Inventory is very, very low. What's going on? What's driving this price action? Is it technical? Not really. I wouldn't say that natural gas is quote unquote overbought. It's not extended price-wise year over year. Price-wise year over year. So what gives? So the other day, I posted this with members. It came out about 7 o'clock at night. And I had just mentioned on a market wrap with members that I was suspect of a possible, maybe it was Thursday night stock charts live. I was suspect of a peace deal. And then when I logged off, I went in, I saw the article. This is the article I posted in the members area. Iran delivers Ukraine war peace initiative from Europe to Moscow. Ever since then, natural gas prices have been under pressure. Then this came out tonight, and this really got under my skin and really reinforced what I'm thinking. And I hope it's right. I want peace. Everybody wants peace throughout the world. So I'm fine with it. I've come to a peace accord. Great. Biden issues final decision on state sponsor of terror label for Russia. Now, automatically, I assume the potatoes are going to do the exact wrong thing at the exact wrong time. And I clicked on the article. I fully expected him to have declared Russia a sponsor of state terror. And then I read this. Biden has made a final decision against designating Russia a state sponsor of terror. So there's no way that there could be a peace deal if the United States designated Russia a state sponsor of terrorism. So automatically, I see this. I wait for the regular hours price, the regular hours after hours trading to end. That's at 8 p.m. Eastern Standard Time. And that's when the action really begins. That's when the futures market really begins to ramp up. So that way the little guy can't get out of his positions. So you take a look at the price action after hours, and you take a look at gold prices dumping. Down here, we have the 10-year yield. They shot up since pulling back, but still up on the session. The dollar went parabolic. And you could see I was so concerned about it because we own gold mining stocks. And I set up some alerts here letting me know if the dollar breaks out or breaks down. Because as I mentioned on Market Wrap, members, I posted in the members area, Market Wrap, I mentioned on a market wrap that this spike up in the dollar today occurred on massive, massive volume. Let's take a look. Massive, massive volume. Yet, the shares of the UUP, the Dollar Bull ETF, this is sponsored by TrendSpider, 35% discount code below. Automated technical analysis. So the dollar, massive volume, closed up, I think it was 0.58%, something like that. On stockcharts.com, it's 0.58%, I believe. UUP. Yeah, spot 58%. A bullish move, no doubt about it. But the volume and a little bit of a fade on the day had me a little bit concerned that we may be seeing a bit of a parabolic blow off top on the dollar. That does not mean it can't move up higher. And in fact, you take a look at a 15-minute chart, it implies that we just may break out higher. So when you're taking a look at a weekly chart, this is where I become a little bit more bearish. You know, we broke out, we have resistance above at this volume shelf. So if there is, the reason why I'm focusing in on the US dollar so much is that if there is a peace deal, a ceasefire of any type in the Ukraine, you're going to see the dollar roll over. You're going to see gold rip up higher. Why? Because the dollar has been the safe haven play. And inversely, if the dollar pulls back, well, we know that gold, the miners, etc., they move inversely. Now, I'm bearish right now on gold and the miners. I think they're going down tomorrow, but it's not going to last forever. So I'm just sharing for the sake of this observation that I think that we may be looking at some sort of a deal coming out of Europe, because those backstabbers over in the EU would backstab us in a heartbeat in an effort to not to have their citizenry in the streets with pitchforks, which they're already doing in Denmark, Serbia, Czechoslovakia, Germany. They're already out in force. Britain, they're already out in force with pitchforks ready to overthrow those governments. And they're going to have to come down on them like a ton of bricks to get them back in the homes. There's only one problem. There won't be any heat. So a lot of pressure on the EU officials to keep their little fiefdoms going, and they will cut a deal with Russia. I have little doubt that they will. So let's go over a few more futures action here. Since we're live, let's go over some comments. This was not scheduled. Who do we have on? Seymour, hey, brother. William, hello. Hey, Talon, we're live, brother. Good. Thank you, Seymour. Always reminds me with the audio. Thank you. The lovely Jody. Hello, Jody. Talon, just got off the phone. Emergency alert from the state of California to cut usage to prevent blackouts. So we had and this is a great point that Talon brings up here, is that you have California that is issuing states of emergency, and you have the midterm elections coming up with only a couple of months. So it's not going to bode well for the Democrats to keep this war going. A ceasefire through the midterms would do them well. Oleg, hello, sir. Hello back to you over in Russia. There you go. Hey, Jody. Okay, so let's do some futures action here. The dollar is still holding after hours gains up about just shy of a 0.25 percentage point. It was up higher before. I have my alerts set here. It'll probably wake me up in the middle of the night, but we have our alerts set here. Either we break out or we break down. That if we break down without making a new session high, that would be a lower high. That's a double top and a breakdown. I hope that's what happens. I don't think it's going to happen though. What I hope for and what I get, two different complete stories, opposite stories in general. The 10-year yield gapped up higher on the session. We're up about another 0.5 percentage point. Folks, I've been warning about the rising, let's go to a 4-hour chart here. The rising 10-year yield, okay? We went short of the Qs. We booked profits last week. I reshorted the Qs again today. We shorted Netflix today. We are, again, taking a negative position in the market. We're holding on to our core positions in the mining stocks and the gold stocks, in the silver stocks. It hurts, I'll be honest, but we are hedged by selling covered calls on the positions and generating some cash flow. So we're weathering the storm and using our shorts as a hedge on our portfolio. So 10-year yield, this is a threat to technology, folks. The banks did not do horrible today. What did do horrible were the tech stocks. So what you're taking a look at here are the semis. Oop. SMH down 1.12% versus the banks, which is down only 0.24% on the day. So you can see how the bank stocks, which generally thrive in a rising interest rate environment because they make more money off their loans, well, they're doing less worse than high-tech beta stocks, which are going to get hammered as we take up more and more real estate above a 3 handle. That's the note. Sorry, I almost fell off my chair there. A 3 handle on the 10-year yield. Eventually, I'll get this right. There we go. So we have new session highs versus the current trading day, and it looks as though yields are going to press up higher tomorrow. So a warning flag on the track for tech stocks in particular. Now, we're looking at the yen tomorrow as a possible long trade. And I know this is an ugly chart. The key to remember here is that the yen is, while on this weekly chart, breaking down to new lower lows. There's something odd happening with the RSI. And what the RSI is doing is putting in, this is a weekly chart now, remember that. The weekly chart is putting in higher lows. And it didn't just start this week. It started several weeks ago. So what I'd be looking for here on the yen is ideally a capitulation sell-off on the yen. And then what I would want to do is either buy a call spread, meaning buy a deep in the money call, sell a deep out of the money call, going out a minimum 90 days, and try to trade it for a swing trade. Or if I wanted to play it really conservative, I would sell a naked put just out of the money, or we could just buy the FXY and get long of the yen. I prefer not to do that. I'd rather go with a call spread. So that's the game plan here on the yen. Now, the euro, last I looked, was really giving up a lot of real estate intraday, but it has since bounced back a bit. So the question is with the euro, are we putting in, with all the bad news over there? Remember, natural gas prices not collapsed, corrected hard today on horrible news out of Europe, which is bullish for natural gas. Inventories of natural gas are below the 5-year average. So why are natural gas prices falling? I suspect that we have some sort of a peace deal out there, and this is me going out on a very, very long limb with the saw with my back to the bad end of the limb and hacking it off. But I'm putting myself out there nonetheless, just for the sake of it. Because if I did call this, wow, that's going to make for a great follow-up video. So I do have my reasons. So the euro bouncing back here a bit. The question is, do we have a higher low? This is only a 15-minute chart. Let's go to a 4-hour chart. Make it more interesting. Do we have a higher low here? And can we break out above this? I don't know why this is doing this to me tonight. This upper band of resistance, which I will put in green. Now, what happens? What's the significance of this happening? If, in fact, the dollar's rally tonight results in a reversal bar and the euro's drop along with the yen's drop results in bullish reversal bars. But what that means is that all those commodity trades that are out there that trade inversely of the US dollar, they start going in the opposite direction. They start money flows going into them, and they have been beaten to the dickens. Unlike the tech stocks, which is still very expensive, your mining stocks are very, very cheap. So these are the opportunities that we're looking for, but we can't get aggressively long of these names until such time as we have some sort of a signal out of Europe and out of Japan that they are going to help defend their currencies, and the dollar goes in the opposite direction. You can see that on this 4-hour chart of the euro that we are in a trading range here. So when you take a look at natural gas, which I've spoken about, but I haven't gone over the after hours futures because they were down earlier. Let's just type it in here. Yeah, they're still dropping. We're down a percentage point. So think about this. Think about the headlines that have been coming out. Horrible headlines. Horrible. Again, Europe's nightmare. This just came out. Europe's nightmare scenario comes true. That's one. Blackouts imminent, 75,000 power as record California power usage sparks demand response event. You would think that you would see a bid under nat gas prices, and natural gas prices are falling apart. So we'll see whether or not we're able to recapture this now resistance level overnight at $8.10 on nat gas. Now, we are long of natural gas, but we're lucky enough to have sold some naked call options to help hedge the position. And we're down on the position, but we're up significantly on the covered calls. So that allows us to sleep at night. So we'll see how this plays out. We have nat gas inventories reports coming out on Thursday. I believe it's at 10 or 10:30 Eastern Standard Time on Thursdays. Let's take a look at the equity futures action. Not loving the equity futures here. Yeah, the S&P E-minis, they're down 0.65% at 38.85. NASDAQ 100, also known as your triple Q. Sorry for all the drawings here. They are down 0.67% themselves. And again, we did reopen short positions today on the Qs in particular. Now, this is odd that you have the Russell 2000, which of late has been less worse in terms of performance than the large caps. Right now, it's slightly underperforming the large caps, which normally would be what you would expect, but of late, not the norm. Let's just check in with oil prices. Oil prices, look at this. This is completely counterintuitive of what you would expect. And this is why you really can't rely solely on the headlines. When you see the headlines come up, and I went over this last night on last night's live stream on YouTube, if you want to check it out, I mentioned that the headlines coming out of Europe were horrible. I went through them. Horrible, horrible, horrible. There's only one problem. Natural gas futures, which you would have expected would have surged. They didn't. They went down. Let's take a quick peek at silver. Silver closed up today. It's down in the after hours session. We've broken support. So this now becomes a breakout point again. So right now, I would avoid the silver trade, anything that trades inversely of the US dollar. I would avoid it right now until you get that bearish reversal event on the US dollar, ideally on a weekly time frame. And that way you have a better certainty of the dollar top being put in, at least in the short term anyway. You never know how long this matter over in Europe with Ukraine is going to last. But there are just some signals out there that there may be a deal in the works in the Ukraine. And if we do get that deal, you're going to see equities here in the United States skyrocket. So expect dollar risk off. If you do get any type of a peace deal, any rumor of it, dollar risk off, equities risk on, and that'll be the play. I would need to cover shorts immediately. So I'm not saying that's going to be the end of the bear market, because that wasn't the beginning of the bear market. The invasion of the Ukraine, the stock market was already going in free fall anyway. That's because of interest rates rising in the Federal Reserve. So you can't lose sight of that. That being said, any type of peace accord over in the Ukraine will result in an equity rally, the likes of which you probably haven't seen in quite some time, but it'll probably be fleeting if inflation keeps up and the Federal Reserve stays steady on rate hikes going into September. And that decision is not that far away. Folks, thanks for joining in. Smash the like button if you would. And I will talk to you on, maybe do an impromptu tomorrow night, but definitely on Thursday night, TZ Burton. Yeah, I just figured I would do it. I was just seeing some strange price action in the futures, and the headlines that are coming out. It's just, I had to put it out there. I wanted to document the observations that I was making, and there's just something amiss. The commodity market, the energy market should be moving up with all the headline news. It's not. There's something going on. You want to call it demand destruction? Fine. There was an article that was released earlier, because I did do some research on, where did I have this? Here. So natural gas prices. I was looking for some opinions as to why natural gas prices may have been pulled down. U.S. natural gas futures shed around 5% on Tuesday, hitting a 4-week low as soaring output coupled with lower demand forecast drags down price, despite the fact that inventories, and this is where I got my inventory read earlier from, are 11% lower than the 5-year norm. And we've gone over this before. I've shown a chart put out by the IEA. I think that's the folks that report the natural gas capacity report on Thursdays. And we are very low levels on a historic basis, and it's being backed up here. So I'm not ready yet to bail on the nat gas trade. If you take a look at some bullish events here, also prompting decline is the outage at the key Freeport LNG export plant on the Gulf Coast. I'm not sure whether that would be a decline. You would think that if you had a cutoff of production in LNG, that would be bullish for the price of natural gas, especially down in the Gulf where it's hurricane season. So you have a lot of refineries down there, hurricane season. It's just strange. It's a risk-off environment right now with natural gas, oil, something's sense, but we're keeping an open mind here, right? We're looking for the reasons as to why we're married to any one trade. I call it a tell. If a stock, if a commodity should go up because the environment that we're in demands that it go up, yet it does not, that's your tell. There's something very, very wrong. Get ready to pull the zip cord on that parachute and bail, and don't get too married to the trade. Folks, everybody have an awesome night. Talon, you're welcome. Peace accord, your lips to God's ears. I'm making the forecast here that it's in the offing, especially ahead of winter in Europe, and it's going to be a very cold one at that. Jody, have a great night. Thanks for everyone being here. Smash the like button. I'll talk to you